Alright. Oh, day 8. My lord, it's been a while since the last video. It's been a rough week, let's just say. Lots of hectic stuff going on at school and whatnot. Trying to get things out of the boat, but needless to say, I did actually make a few trades today. Here in November, I made 3 trades today. I won one of them. But this is going to be an entire weekly recap because on the 3rd of November, I was at 50K and now I'm down to 49,127. So that's the title of the video: how to lose 1K and still win. Because honestly, I'm feeling better now than I was at the beginning of all this shit of the week, despite losing about $1,000 in the span of, what is that, 137, like 80 trades, 90 nearly, 80, I don't know, something like that bullshit, right? And I'm feeling so good though, actually, after this. Bit tired right now because it's been a long week. 6:51 p.m. Crazy parties happening later. Crazy keggers happening. But I mean, we're here now. We're trading. What I want to talk about today is, first of all, like, journaling is great because it allows you to kind of track things. Sorry, I was crashing out up there. I have an Excel sheet. I put this on sheets to transfer onto my computer. Normally I take notes on my laptop. But I have an Excel sheet, and then I also have a Word document that is about 125 pages long, just on how my mindset's going into every trade. And here, as you can see, I have my trade ID. So what I'll do, I'll make a trade, and then sometimes I'll do it immediately after, or if I'm taking a lot of trades frequently, like what happened in this span right here. Whoa, that was bad. How many? Was that 8 losses? 1, 2, 3, 4, 5, 6. It was a lot of losses. Let's just say that brought me down about $800. That sometimes I forget to journal, and then I'll just do it afterwards. But it's really easy when you add a trade ID to each of your trades. It's easy to keep track of which one is responsible for which one. So here, looking at the charts, let's look at that's daily. Here's the hourly. Let me just quickly turn off markers. Just make it markers only. As you can see, I took a lot of trades this week. We did a lot here, did a lot here, did a lot. Not as many on the 5th, a lot on the 6th. I took 30 trades here, if you can believe that. It's just really clumped up. And then I just took 3 today. And I had some positive days, I had some negative days. I believe, if I look at this, today was positive, and yesterday was, like, was that barely positive? 49. Yeah, it was also positive by a few $100. Today wasn't really much, though, because I was busy all day. But what I wanted to get into is, how is it possible to lose all this much and still be happy with it? How do you do that, really? And it took me a while. Let me get back on this. It took me a while to be able to do that because it's frustrating when you lose a lot of trades. But at the end of the day, it's all about journaling. And you do this, and I mean, my journal's a bit private, so I'm not going to show it off. I have some things in there. Maybe I shouldn't be writing, but yeah, 130 pages of this. It's pretty much, I don't know if I can. Can you see that? Yeah, something like that. Anyways, just a bunch of bullshit, right? If you make notes, it's easy to dial in on what exactly you're messing up with. And what I learned I was messing up with was I was taking a lot of trades that weren't opportune. So I would first get on the market and I'd be looking for a lot of trades. I'd be looking widespread, kind of like on multiple time frames. I'd be looking like for something that's really good. And if I get that good, if I lose a trade that I make off of that, whatever, I lose it. Either way, I'm usually not just making one trade in a day, as you can see here. Well, that's even on a 5-minute. So, scroll this. Scroll. So what would happen was, I would be looking at it in a grand scheme first of all, and then as I get more into it, I would just be completely forgetting about a few key features of any good trade. So I told myself, like today and yesterday, okay, I'm only going to take really good trades. And you can actually see when that happened. Like here, basically, this is when it was happening. I like lost all of these. Look, losing 8 or 9, whatever I lost all of these, and I was like, all right, you know what? We're actually gonna pay attention to the trades that I'm taking here, and I started paying attention to volume levels. And this video is more so on how to trade V levels, because it's really like the only way you're gonna be profitable in my strategy is if you're keeping track of these things up here. So I would be getting into like my mind about things. What you need to do, take a little breather. You take a breather and then you come back and you're like, you know what? I identify this trading range. I identify this trend coming out of that. What I'm going to do now, I'm going to position myself with the trend or against the range, right? Going back to what we learned the other day, where you're going, let's do this, wrong thing. Where you go, boom, and boom. Dial into the 5 minute, or here. If I was taking these, I mean, this was not even in the market. So, I mean, generally it does range when it's Globex time, when you're like in the night. But here, again, we set our levels. In a range, what are we doing? We're fading, but only when we get to the most prime opportunities possible. What I was doing and why I was losing is because I would be getting to here, and then I'd be saying, all right, we're in the upper portion of the range, so what I'm going to do, I'm going to fade it now and go down this way. And obviously that's not going to work, because when you're in a range, price can do whatever the fuck it does. You're not going to have a good trade if you enter down here. Even though technically a range bounces from top to bottom, it often will go like top, down a bit, back up, down, back up, back up, back up. And especially when you're trading my strategy with 6 pip stop losses, you can't be doing that. So what I instead decided to do was trade not on confirmation, because that's what this is called. I mean, a lot of people will teach like you trade, say, 1 hour trends based on 5 minute confirmation. So you'd be looking for this. You'd be looking for the 5 minute candles to come out of this that are bullish. Then you enter on like an hourly position with a much larger stop loss, hoping to go up here. I prefer my trades to be quick and snappy. That way I can do a lot of good trades quickly. So I don't trade on confirmation anymore. I trade on reaction to price hitting levels within the right trend or range. Obviously, I'm not going to fade against a trend because it tends to push past levels, like in this instance, for example. But if you look here, this is where I took my one profitable trade for the day, and here is where I took the other ones. If you notice a difference between going short here, sure, on a chart, it might look more or less the same. Back to the 1 minute. Oh man, I gotta scroll. I hate NinjaTrader with a passion, man. Shit's killing me. Bring me back to TradingView, please. Here we go. I went short, long, and then I went on it. Or I went long. That was just a bit off. Again, here, 1542. Again, I didn't enter at a level. Sure, this reacted, not at a level, and I missed that trade. But you shouldn't be trying to make these trades, because odds are, look, this also wasn't at a level. I took it here, and then it went down further. So the fact that it's not at a level means that your chances of it reacting and going the other direction aren't as high as they could be. And with trading, you don't just want to be taking your 90% confidence, your 100% confidence trades. Or that's all you want to be taking. You don't want to be taking things that are only 60% confident on. Even though you might tell yourself, oh, well, I can just get a little bit of extra money if I do it like this. That's not actually how it works. You need to only be taking the most profitable setups that come your way. So when price came up to here, I see this huge like volume up here, right? And it was also above where price had previously auctioned up to, and we saw this nice taper off with 96 and 78. Those are 2-digit volume numbers. That's another sign that maybe this is too high, that this is a little overbought. And as soon as I saw that price didn't push through it, because I was also worried about, for instance, this being in an uptrend, right? As you can see. But I knew that this would be a reaction level up here purely because of all this volume that was waiting here. And when I saw that it didn't go through it, it hit it and bounced a little bit, I entered right here at 6744.25 with stops above this, so that the second that this is broken through and the price is going to go here, my stop loss would be taken out immediately. I'm going to lose as little money as possible, or I would make a lot of money if price just went, hold on, yeah, I would make a lot of money though if price actually reacted off of it and went down, which it ended up doing. Price came down here, nearly took my stop loss out, came back up here, and then took me out just around here. Because I didn't have any good level targets really. Like again, there was nothing strong. This only showed up way after I had made my play already. And I wasn't so confident in a move downwards, especially during an uptrend that was this big, so I decided to cut it off around here. Just a typical 3-to-1 R to R. Is how I typically trade, but I'm trying to get better at using those volume levels also as targets. Although it's really easy just to use like a 3-to-1 R to R and just chalk it up chance whether it actually gets to it and statistics. But I am looking into making like profit targets that are just actually based on volume, because as you see here, it would have worked out. And so I realized that if you just wait for the most prime opportunity. That's really the message of today. I'll write that out because I like doing this. Wait for the most prime trading opportunity possible. Because it will happen, all right? If a market is chopping, if a market's not going your way, if you're losing a bunch, don't try to make money back on things on trade setups that just aren't profitable and that aren't 90, 100% confident, that you aren't 100. Holy fuck, I can't speak today. Don't demonetize me. Kidding. I don't make any fucking money. I don't get any views on these. This is for myself, baby. If you take things that aren't 90 to 100% confident trades, then you're just gonna fuck yourself over, buddy. Like, quite simply, like, you might think you're squeezing out a little bit more money, but you're just losing. And that's how I lost, what, $800 in the span of about 15 minutes, is because I was doing that. But when you make a mistake so profound and so pronounced as what I did, where I made the same mistake over and over and over again, you get real familiar with why you made that mistake. And that's why I can end this week on a happy note. Because I'm not looking anymore to get trades right here. I'm not looking more to get trades right here. I only look for trades, boom, boom. I look for trades, boom, in a retracement of an uptrend, or at the top of this, waiting on a leg back. I wait, all right? Here's what I'm going to say. Good things come to those who wait. Tell me your dad has never told you that? Your grandfather's never told you that? Good things come to those who wait? That's like prime advice in fishing. I remember being told that when I was younger. Just wait, all right? Because I promise you, the markets will show profitable opportunity. And unprofitable traders are those that can't capitalize on those. And that just try to capitalize on every single... They try to make opportunity. And in trading... Oh, it's another banger. You take opportunity where you can find it. And forget about it where it isn't. You could go... I mean, this trader setup actually allows me to take a bunch of trades in a day and still be profitable usually. I haven't found days that had absolutely nothing. But then again, I'm also on the charts normally for 4 or 5 hours a day. Okay, that's a lie. Today I was on it for maybe 20 minutes. Some days I'm not on it at all. But don't force it, because opportunity will always come your way. No matter whether it's a bear market or a bull market, you're going to find what you need. And, yeah, just wait, all right? Don't rush trading, because that's how you lose. Anyways, that's about it for this video. gonna get back to doing this this weekend as well. I'm gonna come out with a few more because I want to talk about exactly the trades I made, maybe, and what my plan is for next week with this funded account. But good things will come to those who wait. So stick around, wait for the next video, and I'll catch you later. Deuces.